YouTube, what is good? Welcome back to the channel. I know I'm very inconsistent on YouTube. I don't really post on YouTube like that. I'm more so on TikTok and Instagram. So if you guys would like to follow me on any one of those or on both, the link will be in the description below for Linktree. Just click the Linktree. You'll be sent to, you'll be shown the TikTok and Instagram and all that good stuff. So without further ado, let's go ahead and get into it. So in this video, I will just be using the desktop version, but I will drop another video for the mobile version. But for the mobile version, what I'm going to do is I'm going to show you guys how to actually enter and exit. I can't show you how to exit a contract right now because it's a Saturday, market is closed, and I will not make this video crazy long, and I try not to talk too much. I just try to give you guys the good tidbits, for the beginner traders and stuff like that. So I'm going to show you guys how to actually enter your options contracts and what you're looking at. So right now, like I told you before, we're looking at the mobile. No, I'm sorry, not mobile. We're looking at the desktop version for Webull to buy options, right? So if most of the time, I'm not sure if this will pop up, if it'll look like this, but let's just say most people's will look like a clean slate. So it may look like this. And if that's not there, it may just look like this. But to be able to start putting things in, we're going to press this add button right here. And before we start putting stuff in, if you would like a pre-made layout, just press this plus button right here, and it's going to show you everything right there. So you can press any one of these. You can add stuff in and take stuff out, however you would like to do it. But right now, what we're going to do is we're going to use the clean slate. So you can put charts on here if you would like to. I don't look at the desktop the desktop version charts. Damn, I can't talk. I don't look at the desktop version charts because I use TradingView. So for me, it's pointless to see this. I don't really need it. But for those of you who do, you can change the ticker symbol right now. That was SPY. If we wanted to look at American Express, we can do that. It'll show me American Express. We can look at the 5-minute, the 30-minute, the 1 hour. If we press that arrow, we'll be able to see the 2 hour, the 4 hour, the daily, the weekly, whichever one you guys would like to look at. But let's go ahead and take that off because I don't use it, so we're not going to keep it up. One thing you definitely need is the options chain right here. That's what this is, the options chain. So when I want to look at the options contracts for whatever ticker symbol I'm looking at, this is what I need. I need to see this. So I don't want to look at SPY anymore. I wanted to look at American Express, or I wanted to look at Copart. Of course, you can put whatever ticker symbol it is in there. So you can do it however you would like to. Let's do Blackstone. I like Blackstone. They're an asset management company. I like Blackstone. So that's what I use. Options. We can go with the order entry, right? I believe, yes, I believe order entry is once I press whichever contract I want, it's going to pop up for order entry for me to be able to actually execute. So order entry will be able to execute your contract for you. Right here in the option chain, you just press it. You can't execute from that. You just pressing it. Another thing I like is the positions. Is it going to pop up? There we go. So the positions is the active positions that you're actively in. So let's say I got into American Express. I got filled on my contract. So that's going to be in my positions. It's going to show if I'm up or if I'm down, what percentages I'm at. It's going to show the whole nine. And also orders. So, damn. So with orders, what this does is, let's say I wanted to try to put my order through, right? Let's say I put my order through, but it hasn't been filled. It's going to show up in orders as a position that's waiting. So it's waiting to get filled, meaning working. If it got filled, it'll show you what you got filled at. So what's your average? We're going to get into all of that later. So that's what this would look like. And we're going to go ahead and get straight into these options, right? So I told you guys already, we're looking at ticker symbol BX. I like them. Damn, I'm trying to stretch it out. All right. So we're looking at ticker symbol BX. All right. Now, usually what'll happen is with your mobile version and also your desktop version, they'll only show you 6 options chains. I don't recommend that. You can change it on the mobile version. You can also change it on the desktop version. So you want to click whichever one they're showing you. So you can click strikes, and I'll press all. Most people would probably pick 50 or 30, whatever the case may be. I want to look at all of them. So right now we're looking at a 6-day contract which expires July 18th for BX, which is an asset management company. Ticker symbol is BX, right? Let's say I didn't want to look at 6-day contracts. Let's say I wanted to look at a 106-day contract that expires the 19th of December, right? The 25 in the middle is just the year that you in. The 100, I don't want to break this down because I'll probably lose y'all, but the 100 is how it's 100 shares in this one contract, if that makes sense. It's okay. I don't want to break that down because I'll probably start losing y'all. But yeah, so these are your strike. These are your contract dates when they expire. And of course, I just showed you guys, we got 18th of June for 2026. We got 20th of March for 2026. Let's say, like I said, we want to look at December 19th that expires in 160 days, right? Let's say I wanted to look at this one. So when you're actively pressing the strike price, which is in the middle, let me break that down. Strike price is in the middle, meaning what price is trading at right now. So right now, price is going for $162. That's what price is right now on the charts. Anything in color will be in the money, meaning that the strike price has already been passed. So we're trading at $162 right now, right? So this is your call side. This is your put side. Right side will always be the buy side. The right side, left side, if I didn't say that, left side will always be your buy side, meaning calls. And the right side will always be your puts, meaning sell. So anything in color will be in the money. And I told you guys what that means already. If price is trading at $162 right now, right? And let's say I wanted to go hit 170. So once I get closer toward my strike for 170, if it's trading at 162, my 170 then turns into one of these colors, meaning it's going to be in the money because my strike price has already been hit and or passed. If that makes sense, if I'm not losing you. So for somebody who wanted a $135 strike when price was trading at, let's say, 125, right? Price came and it hit this 135 and went lower. I'm sorry, it went higher because I'm looking at the calls. It went higher, so meaning that my 135 is now in the money because now price is at 162. And it's the same thing vice versa for the put side, meaning sales. So if I wanted a $170 strike when price was at, let's say, 180, I got the price, or I got the stock going down. So meaning I got the stock finna sell off. It was at 180 when it was at my selling point. Let's say I wanted to go hit 170. Price is now at 162, so it passed my 170, making it in the money. In the money will always be more expensive because you have equity and/or not equity. You have the value already baked into the contract, so it's always going to be more, meaning it's less riskier, right? So this is your out the money, anything that's not in color. So that's that. Now let's go ahead and start buying these contracts. So when we're looking at these contracts, I like to tell folks this: always press the ask. If you press the bid, it'll throw off your contract, and if you're not paying attention, you'll probably mess it up. And I'm gonna tell you what I mean. So when we press the ask, this green pops up. So when we pressed our ask, because we're on the call side, I want to buy a call position. Now you guys see that it did. No, we ain't got to do all that. You guys see that it did that. All right. So if I press the bid, right, the bid is saying I want to sell a call option. I don't want to sell a call option. I want to buy a call option. So just to make sure that you guys don't get thrown off by that, always just press the ask. You can always, change it if you're paying attention. But, it's sometimes you may just, players mess up. You may just mess up sometimes. So when you press whatever contract that you want to purchase, so for 165, it's going for $12.80. That don't mean $12.80 for those of you who are wondering. What I like to tell folks is this: take off the decimal, and however that number looks, that's what it is. So once I take that decimal away for that $12.80, that means it's $1,200. So it's going for $1,280. That's how much they're asking for this one contract. And let's say for this one, this don't mean $5.15 how much this contract is. In options terminology, that means it's $515, right? That's how I like to explain it to folks. So that's how you read that. That's how you know how much you're going to pay for an options contract, and that also means your average. So if I paid $395, that's going to be my average. So people be like, "Oh, I paid $395 for it. That's my average. So I spent $395 on it." That's all. So I'm not going to keep going over that. So because we are looking at the 165 strike, right? Because we looking at that, now we're going to go ahead and just go down the line and read this. So, of course, we have a single options call. We're looking at the ticker symbol BX. We're looking at the strike. Which one do we go with? 165. We're looking at our contract expiration date. So we bought it for the 160 expiring on the 19th of December. So that is the options chain we're in. And also that is the 165 is the strike that we're looking at for this options chain, right? And we're in a call, meaning we want the stock to go up. So, of course, we press buy and your quantity. How many of these contracts do you want? So if I purchase one contract for $12.80, it'll just be that. But if I wanted to buy two, it'll be $12.80 times two. Of course, everybody should know that. So let's say we wanted to change it to two, you can do that. And this right here is one of the most important pieces I'm going to tell you. I never do market orders. I always do limit orders. So when you buy at market, that means that you're going to buy wherever the price is, no matter what. So let's say the spread was actually terrible on this contract. So let's say the contract is going for $12.80. That's how much they're asking for. But the bid, let's say it's $900. That is a crazy spread. So if you got in at market, you're going to have to eat that spread. And not only that, you're going to need the price, you're going to need the chart and/or price to go further into your direction for you to be able to start making money. So if spread is terrible, leave it alone. And also that's why I never do market order, because sometimes when you first get to the charts in the morning, sometimes spreads will be crazy and you have to wait a little later in the day for them to, settle out a little bit. So I never do market order because I'm always trying to get a better average and/or a better position to get into. So I always do limit, and with limit, let's go ahead and break that down. So let's say with limit, for our same contract, let's say price is trading at, or they're asking for $12.80. So let's say, before I do that, I always like to get into the mid. So with the midpoint, what is in between the ask and the bid? What I like to do with the midpoint is this. I like to try to stay at least 5 to 3 points away. If I get it for 2, that's cool too. So if they're asking for the bid, for in the middle for $12.40, I try to go for like $12.38, $12.36 if I can, or something like that. I try to stay behind the bid as far as I can. So that's where your limit order kicks in. So if this number is going for $12.80, so let's say price started to come down just a little bit. Once price comes down, then that means that this ask and this bid price is going to change. So it's going to go from $12.80, let's say it's going to go to $12.70 or $12.75 or something like that. So once that changes, my midpoint changes and this bid point changes. So I try to always, get a better average. So that's pretty much what that is. And of course, you guys see how much it's going to cost. And this right here, day and GTC. Day meanings that, let's say I wanted to execute on this option call, and let's say they didn't fill me. Fill me meaning that I got in, so I'm already in my position. So let's say I want to buy it and I'm just waiting for it to fill me. If it never fills me before the end of the day, this contract is going to get canceled. So I never got in because they never came back into my area for wherever I set my limit price, right? But let's say I wanted to do a GTC, meaning good till canceled. So let's say today I didn't get in, but tomorrow my contract is still open. So if the stock was to ever come back down, they're going to fill me into my contract because it never canceled. I never canceled the position. So that's what that means. So I hope I pretty much covered everything for you guys. I know, you got the implied volume, you got the open interest, delta. These are the Greeks and stuff like that. I kind of don't really want to get into that, but the most important ones I look at really is theta and delta and open interest. These are really the things that I look at: open interest, delta, and theta. I don't really look at nothing else because I don't care about nothing else. I buy my contracts further out. I'm always doing like 6 months plus contracts. The only time I do a shorter term contract is if I see a really quick move. So my short-term contracts would be like a 30-day contract or a 2-month contract or something like that. Other than that, I'm not really trying to do anything shorter than that. But yeah, that's pretty much how you get in, how you get out. If you guys would like to hear a little bit of the theta and the delta, I can go over that with you, or the open interest, I can go over that with you. But I won't do that in this video. I don't want to make this video crazy long. If this video was helpful, if you guys like the tips or anything that I gave in here, let me know. If you guys like the video, be sure to like, comment, subscribe to the channel. I'll try to be more consistent on here. I just need to see what kind of content people want to see. But yeah, that's pretty much that. And I'll catch you guys in the next video.